Good morning, everyone, and welcome to Today y Mañana. I'm Alex. This is Xavier. We're very excited to have you joining us this morning on a sunny morning in Charlottesville, Virginia. It's a beautiful morning. It's a beautiful time.
It's a special day. So I just wanted this. Today's a special day. So his brothers and myself decided to gift Alex a café con leche.
An actual café con leche. So now when I say that it's a beautiful day to grab your café con leche and get into your cozy place, this is exactly what I have myself. I'm in my cozy chair, and I have my café con leche courtesy of, I think it was Nick who brought it. Thank you, Nick. And so, in honor...
It was not my idea.
I know, it was Xavier's idea. And
I was the labor, he was the...
And Michael's going to pay for it. There you are.
I like that.
We're all in.
Yeah.
Bad end of the deal.
So be sure to grab your café
It
con
was
leche.
$34. Yeah.
Nothing like it, huh?
Yeah.
Nothing like a café con leche in the morning here in Charlottesville. And of course, it is our 100th show. So we are very excited. We have some fun chatting planned.
Absolutely.
I mean, which is basically what we do every day on Today. Like we always tell all our guests, it's basically a conversation. You're going to be sitting at a table with Xavier and myself. And today we have at our table Nickolas and Michael, the other Urpís. Thank you for joining us this morning.
We're happy to be here.
Thanks for coming.
Happy
very special
centennial,
episode.
The other foundation of the show.
Exactly.
They've been pitching in. So
They have been pitching
many
in,
times.
and I'm sure we will get comments from the other foundation of the show, which is Mrs. Urpí, that she will send us some questions and comments on today's.
I like how
show.
earlier you mentioned remember how you said that Jerry spent 1 minute praising you and 30 minutes, telling you what you could do better. That was nothing compared to when they got home and then Mama Urpí had about an hour's worth of stuff that they could have done better.
Because she's experienced.
You
though.
guys, you guys did a great job.
it.
Now here's everything you can do to make it better, including what precisely you should say next time.
That's right.
So we love Mama Urpí and all the great work that she does behind the scenes. She really is important to the show. And of course, we love the I Love CVille Network. Just to thank you for Jerry for thinking of this in the first place and,
Absolutely.
and saying, hey, you guys want to do a show. And thank you for Judah. He's been behind the camera for all but one, I think.
Yes.
All but one show where Jerry spelled for him when he was
That's amazing.
When he took his 1 day of vacation a year.
1 day. And he happened to take it that
Just
day.
happened to take it on a Thursday.
Next time, take it another day, will you?
So he's been behind the show since the beginning. Thank you to Emergent Financial Services and to our current partners, Castle Hill Cider, Craddock Serious Insurance, the Gym CVille, Forward Adelante Business Alliance. Of course, we always appreciate even our past partners that have partnered with us on the show. It's like business, right? People come and go, and they'd always
made it all possible at the beginning too.
Yeah, we appreciate
Exactly.
everyone who made it possible at the beginning, including Aqua Hand Car Wash, GBS Financial Services, Vitae Spirits, and Cristel Noel State Farm. So we just appreciate all our partners throughout the years that we have had.
Throughout the 100 shows.
Throughout the 100 shows.
It's
Well, it's
been
years
wonderful.
now, too. It's
that's
2+
true.
years.
2 years.
Yeah.
We are now in the
Exactly.
plural.
Yeah.
In the plural of years as well as shows that
Well,
we are doing.
it's pretty cool because, this is literally the third year. We're in January, so it's almost 2 years, which I guess 52 weeks out of the year, so we're at 100 shows, so it's pretty close,
Yep,
Yeah.
absolutely.
That's fantastic.
We're on a Thursday, so we don't do Thanksgiving. we do take a break.
Something for everyone to
that
be
one.
thankful for.
Exactly. So we just appreciate everyone who's been with us throughout the years and all our guests from the very first ones. You remember, which shout out Lucrecia and Bernardo. Lucrecia was liked the show this morning. She's watching the morning. She was one of our first guests.
Exactly.
Bernardo.
Yeah. Well, that was
They
the
were
first.
the first
They were
guests.
They were literally
the
the
first guests. Yeah.
first guests on the show. So really appreciate both of you for all your support. Amigos del programa.
Amigos del programa.
Amigos
that's
del
right.
programa. Couple shout outs. Elizabeth Urpí, watching the show this morning, loving the show this morning. There's a heart there. She is loving the show this morning. Elizabeth Miller, Dr. Miller, watching the show this morning. And she says, happy 100th. You guys are my favorite show to watch on Thursdays.
And during the week, not just on Thursdays, I'd hope.
I'm sure it's every day.
Every day.
Every day.
Now on the weekend,
It's
she
her-
likes one of those other shows.
It's her favorite show to watch. So thank you to everyone. Be sure to like and share this morning's show. Send in any comments, questions. We got a bunch of stuff. We are going to cover
suggestions, or suggestions for the
or
upcoming
people that you
100
want us to
shows.
feature.
Yeah.
That's right.
Yeah.
Especially that. That's right.
Well,
'Cause,
we
I mean,
get
that's the goal.
recommendations. Yeah, I have to actually say, if we're going to shout out, I remember that Johnny Ornelas and Philadelphia both sent us multiple suggested guests. So thank you to them.
Johnny Ornelas from
yeah.
both across Guadalajara and El Mariachi on
Yeah.
Giants Crossroads, which is doing tremendous business. It's a fantastic place. So
It really is.
A big shout out if you are in that, even if you're not out in that direction. It's like 20, 25 minutes. Go to El Mariachi.
Oh, it's worth it.
delicious. It's
Absolutely.
worth it.
Yeah,
it's so
it's
good.
delicious.
Especially there's like the choripollo. There's this thing where they have the. I have to mention it. I don't know what I say.
Of
in the
course.
morning. You got the fries, but they put like the chorizo and like the cheese on top of them. So it's like, oh, it's like
The fries?
yes, French
But
fries.
pollo is chicken.
I don't know why it's called choripollo, but it's like
Was there chicken on the side?
no, there wasn't
Oh.
chicken, but it was like I think that's what it was called. But
I don't think
could
that's.
be
I think it
wrong.
was something else.
Well,
but-
chorizo for chorizo. You know?
Yes,
Yeah, it
pollo
was
is
some kind
chicken.
of yeah.
I know.
Okay.
Well, maybe
was something-
maybe it's supposed to choripolo.
Yeah.
Maybe it looks like a
I don't
chicken.
know. It was something delicious with fries.
Yeah, it was like that Buddy Hackett
chorizo.
joke.
Maybe it's
chicken.
choripapas.
Maybe it was choripapas. That's probably what it was. It was
what
probably
Yeah,
choripapas.
I was gonna
Yeah,
say
that's my-
the chorizo popes.
But you should definitely check out El Mariachi. Piramiro del Programa. They were one of the first to send us Claudia Cruz from
Yes, along with Repos
Dulce
on
de
Wheels.
Leche.
And we're having
Repas
somebody
on
come,
Wheels.
right? So isn't eventually...
Oh, Sandy Ornelas will
There you
be
are.
coming on the show from Sandy Boo Photography.
Yeah.
Is going to be joining us later this year, in
Yeah.
March, I believe, coming on the show. We've got a lot.
That'll be
We'll
fun.
mention some of the amazing entrepreneurs,
Upcoming.
Latinos that are upcoming on the show for sure. We got a lot. We're not just going to, sit here and chat it up today. We actually have some topics to cover.
We have
some
content.
We have some amazing content for all of you. But be sure to send us questions, comments, and people that you would like us to feature on the show, because that's what we love doing. Oh, one other shout out, of course, our logo, Lily Daray from Cielo Creative. You see that every time when you see the orange Today y Mañana logo.
That's right, exactly. It's a
So
great
a shout
logo.
out there.
Wasn't it Pops who came up? That was you who came up with Today, man.
Yeah,
Mañana,
Today
yes.
Mañana was Xavier's
Yeah.
brainchild. Yeah.
It's
See?
a fantastic name.
I
Every-
just kept it simple.
Every 30,
Exactly.
40 years, he gets one of those epiphanies, and all it takes is one. That's what
That's
Tesla
all.
said.
That's
all
exactly
it takes
right.
is one.
Yep, exactly.
And I got today and mañana.
Yeah.
There you go.
AC engine, Today Mañana.
There we go. Perfect. Alrighty, so gentlemen, where do we want to dive? We have a couple topics today. I know we've got Latino savings is going to be a topic we can talk about. Some dividend research. What's going to happen this year? A little crystal ball. I know we've got some the evil R word talk.
That's right.
Which
what's the evil
yeah,
R
that
so-
which shall not be named.
So I figured, obviously, the goal here, I mean, we're a financial company, right? So the goal here is to at least for the first maybe 30 minutes or so, talk a little finance, touch upon a few topics that are of interest. But, one of the things that you and I always talk about is and people ask us this all the time, is this the right time to go into the market, right? And the answer is, it's always the right time, right? The question is, of course, if you have $100,000, you say, I've never invested in my life, and that's all I have, do I invest today? That's a different question than should I be in the markets, right? Because there's a transition process
Exactly.
there.
Well, how much should you
Exactly.
invest? No one's saying put $100,000 straight into Google stock or something.
Exactly. So later, so I'll go through some numbers there, but I know that Mr. Nickolas here had some topics he wanted to cover, which are terrific
Well, I
topics.
thought you were going to lead off with.
Oh, yes, what? I'm
no,
leading
with
off.
one of your. Well, because it's interesting. Because my dad yesterday goes, no surprises. Send me all the research that you'll have. So I sent him all the stuff I had. Now I'm looking over at his desk, and he's got something he didn't send to me.
Oh,
so
no.
he's
So I don't.
cheating.
I don't have
He
any
wants to-
surprises. It's
Oh,
just
okay.
it's just that my memory is not as good as yours. So I have to. These are what they called in the old days cheat notes.
Cheat notes.
Which of
Cheat
course,
sheet cards.
which of course, given the fact that I got new vision now, I can't read. So it's going to be fantastic.
You want me to
being
hold
able-
it up for you?
from far away, yeah.
Well, so it's interesting. So I guess if we want to start with the Latino
we can start with
community,
Latino savings.
It's interesting because I was looking at some statistics, and one of the things I ran across thanks to NAREP's State of the Wealth 2022 was that fact that only 25.5% of Latinos invest in a retirement account. So it's one of those things that like they're very much not focusing on this very, very vital part of their financial life. And it turns out that 30% of them 30% of Latinos will invest in cryptocurrency. And one of the reasons why is because it made it seem like their family and friends have heard about it and therefore recommend it. So they're all getting in, and so they are sort of like over, because they are, so more Latinos are more likely to contribute to cryptocurrency than a retirement account. And so I think it's something that, like, going forward, it's something that I think what I'd like out of today and Mañana is to be like, let's try to find a way to get Latinos to commit more to their retirement accounts.
So I think, and that's these are great statistics, right? I mean, I question as to outside of the Latino community, how many people save for their retirement,
More,
right?
I think something around 40%.
40%, okay, which is still really low when you think
low.
about it. However,
don't quote me on that statistic.
yeah, no.
It's just
So one of the things that we have to, it's a culture thing, right? One of the things we have to remember is Latinos come from countries where the concept of retirement doesn't exist, mostly because they just don't trust.
The banking
right?
system
exactly.
is not
They don't
always
trust the
reliable.
financial system in their countries, right? So therefore, they come here knowing that it's different, but the trust is still somewhat skeptical, and it takes them a little time before they realize, wait a minute, it is a good idea to begin to save. Mm-hmm. And most of the time, maybe they're working for someone who has a 401k or 403b, and they begin to put some money away, right? But it's interesting about, and it's just not just Latinos, but I think in other countries also, call it countries where, U.S. is special, maybe even Europe, you have more or less the same things, although Europe, being that they're more socialist, a lot of people, it's like, they don't save either because, like, they're going to take care of me when I retire, so I don't have to worry about it, right? However, I think that what people like to do is they either invest in something that they think is going to just kind of boom. In other words, this is a great opportunity. Crypto, somebody told them, yeah, I just made 100% on my money. I doubled my money. So it's like, oh wow, I got to get in there, right?
Yeah.
Which is a fallacy. It's the wrong thing to do. Sometimes it may work,
volatile.
but it's extremely volatile, extremely risky. And on the other side, what they do also buy a lot of is real estate, and the reason is because they like to feel like it's tangible. They can touch the land, they can touch the house and say, I see it, I know what it is, I'm willing to invest in it, right? So you have those two that I would suspect most Latinos like to invest in. Mm-hmm. But the education process, and we've talked about this a million times, and I know FABA tried so hard also to have the seminars, et cetera, where the education is important to make them understand the goal is little by little you start to save, and those monies do grow over time. So when you do get to 65, 67, whatever it is, you have a nest egg, right? You have some money there. You can say, I got my Social Security, I have my house, I paid it off, but I also have this little savings now that can get me through the rest of my life, right?
Exactly. It's about, I think, prioritizing where you put your savings. It's like you said, crypto, it's always going to have the story, right? It's always going to have that buddy who said, yeah, I put $1,000 in Bitcoin in 2011, and I made tons of money. I tripled my money, I quadrupled my money, I have 10 times that, right? What you'll never hear is your best friend tell you, yeah, I put $10,000 in Bitcoin at the beginning of 2021, and now I've lost my shirt.
Yeah.
There's nobody's ever going to tell you that. Your buddy's not going to tell you.
Nobody.
Yeah, I made a really bad decision
Yeah.
here. It's behavioral, right? It's based in behavioral economics. People always tell you the stocks they picked that went up 100%. No one ever tells you, yeah, I picked this stock and it was a really bad decision. I lost a bunch of money on it, right?
It's true.
The story is only ever going to go in one direction.
It's like when people go to casinos. I've never heard anybody say, I lost my shirt. They always tell me, I won $10,000 this weekend. And it's like, they go every weekend. And so how about the other weekends?
Yeah.
And did they ever make any money? So, casinos wouldn't be around if most people didn't lose money, right?
Right,
So,
yeah.
But
Exactly. So it's about sort of reminding people, all right, one day it will be all right. Like if one day you've got a nice big bundle of savings and you want to take $500 and put it in crypto, be our guest, right? But if all you have is $3,000 that you've saved up over the years, the first thing that needs to happen is it goes into a retirement account and it's diversified. Not like, okay, I finally have $3,000 that I've scraped and saved, and I'm going to put it in crypto. Right, because the risk is just too great. The risk is not commensurate with the fact that this is your entire life savings.
Yeah.
Well, there's also another portion that we're also like skirting by, which is what the number one expense most people will have over the course of their entire lives are the taxes, period. Everyone
Is there what?
is their taxes. Taxes is the number one expense. Like, and everyone always takes it out because like you got to pay your taxes. But
I never
in
thought it
reality,
was an expense. I just
It's-
thought
it
it's
is-
a punishment. But
well,
anyway,
it is.
that's-
I mean, you could put you could
Punishment for living.
It is a punishment for existing in a country. However, but at the same time, it is the largest expense over the course of a person's life. That is going to be the most that they pay is going to be for taxes. So you take something like a Latino, and they have let's say we're just using the same number, $3,000. Cryptocurrency isn't like tax exempt. It's not growing tax free. It doesn't do any of that. Like,
good point.
if you put it into a retirement account, like me, because think about it, $3,000, you could just put it into a Roth right away, just right then and there, and let it grow tax free. I mean, there's the whole point is that there's a whole portion that like the government is allowing you to say, hey, you can take this piece and you can let it grow tax free or put it in tax free. And then either we'll tax it later or we'll tax it now and then not ever tax it again. So there's already an advantage that you have by just putting it into a retirement account that makes it already better than just dumping it into a crypto that you hope will take off.
Exactly. You want those tax
Your
tax
savings,
benefits.
yeah.
Because especially when you're starting over a long period of time.
Yeah.
The
So,
drag is
so
terrible.
it's interesting you talk about these things, and you know, obviously the markets are, you know, no matter which market you look at, you know, there's volatility, right? I mean, last year was a perfect example that even the bond market was usually a market where the stability is much greater, right? I mean, the market in general was down about 14%. I mean, for a bond market to be down 14% is astronomical in the sense of like that just never happens, right? So I wanted to give people a feel for when we talk about asset allocation. In other words, the idea is to diversify your particular savings, right? In other words, you got those $3,000, you want to buy some large cap value stocks, meaning companies, very solid companies, big companies like the Costco's of the world, right?
Yeah.
Then you want to buy some growth stocks. Then you want to buy some small stocks, right? And of course, you may want to buy some bonds just as a counterbalance, right? And so what's interesting about that and what people really don't understand, but if you think about it, it makes a lot of sense, is by diversifying those particular assets, as opposed to just buying crypto and hoping and praying that I've got it at the right time, as opposed to finding that you're in that FTX and you just lost everything, right? You want to have that diversified portfolio. And so I'm just going to give you some examples because the down markets are where people get very nervous about, right? So back in 2008, right, which is the financial crisis, for example, the S&P 500, which is, you know, the top 500 companies in the U.S., is an index of the top 500 companies in the U.S. That year, 2008, was down 36%, you know, more or less, and I'm just giving you estimates, not exact. NASDAQ was down about 30%. The Russell small caps were down 31%, and growth was down 37%. So those are also in the 30s. But if you see that small caps were only down 31 versus large companies down 36, right? Which is kind of interesting, right? So last year we almost had a little bit of the reverse, right? The S&P was down 14, NASDAQ was down 30.
And NASDAQ, remember, those are your biotech
Exactly, a
companies.
lot of
They're
tech
in
companies in NASDAQ. That's right. Small caps were down 15, and growth was down 25, right? So begin to think about this from a perspective of, you know, where do I want to be? How much do I want to invest in these particular sectors? However, if you look at over the last 20 years of the markets, the S&P was up 9.7, the Russell small cap was up 9.3, and growth was up 10.7. Very, very close to
Almost
each
all the
other,
same.
right?
Yeah.
But the beauty of, so in other words, even if you do nothing, you just diversify and do nothing, over a 20-year period, you're going to get somewhere between probably 8 to 10% return, which, as Alex always says, if you get 7% return on your money doubles every 10 years, right? Which, if you think of that money growing over time, it's amazing. But think further. If you have an asset allocation and you say, I want, 25% here, 25% here, 25% here, 25% here, and then all of a sudden you get a year like last year where tech is down big, right? The Nasdaq's down, for example, like I said, some 30-something. The S&P's down 14, and the other ones are down 19, 20. Now you have to reallocate. What are you doing?
Go back to the 25,
You're selling
25.
those that did better to those that didn't do so well, right? And over time, they all come out to be the same. But you're now capturing more of their upside every time you do that, right? So instead of getting, 9 to 10% return, you may be getting 11 to 12% return just by doing what you're supposed to do, which is saying, this is the allocation that makes sense to me, right? For my goals, for what I want to achieve over time. And by just shifting that and it doesn't have to be annual, it's just, when things happen and you say, it's got it out of whack. Don't overthink. Don't say, nah. It's like 2020, right? Tech was going through the roof. You can sit there and go into 2021 and say, nah, tech's going to continue to do well. No, it forces you to decide. Don't be subjective.
You don't have to guess.
Yeah.
My allocation is this, and every year, every quarter, I rebalance to this. I don't have to guess. All right, who's going to do well this quarter? Doesn't matter. It's automatically going to rebalance. Right, because you're going to get back to that baseline that you established was the right risk for you.
Exactly. And as you always say, you may take 10% of your portfolio, right, and say, I want to play with this. I want to buy Tesla. I want to buy crypto. I want to buy whatever it is. Some of your friends say, oh, you should buy this particular stock that nobody ever heard of. Fine, buy some of it, right? Go ahead and take that 10% of your portfolio and say, that's going to be the real risky part of my portfolio where I'm going to make it big. I might lose it all, or I might just grow the same as everybody else, and that's fine. That's the fun of investing too. You want to have fun in what you do.
Exactly. A couple shout outs. Bill McChesney, thanks for watching the show this morning. Mrs. Urpí watching the show this morning, says congrats on your 100th show. Who I thank Nick for informing her this morning that it's our 100th show.
Oh, yeah.
And she says she'll give us the 100 suggestions later.
100 suggestions.
She'll give us 100 suggestions
I like
later.
that. It's like the 95 Theses of Martin Luther.
Dinner's going to be good tonight.
She's going to pass out material of 100 things you've done wrong.
Here's what we can do for the next 100 shows.
Yeah.
Going forward. But it's such a key thing, and I know, Michael, you had done the research on it just last week. We talked a little bit about the difference between diversification versus just picking those big names.
Yeah.
Remind the audience, like some of the companies that did a lot worse than the market as a whole.
Tesla, Google, Meta, which is Facebook now. Let's see, I'm trying to rack my brain around it. But yeah, it's like if you looked at like 7 or 8 of the top 10 companies in the S&P 500 index, they all did worse than the S&P 500 did as a whole.
Yeah. So, that's a good point. Because you look at, again, you look at 2020, 2021, and 2020, right? It seemed like the top 10 or 15 stocks pulled the S&P 500 up, right? There were some stocks in the S&P 500 that had a negative year in 2020. Same thing this past year. I mean, these stocks were down big. There were some stocks in the S&P 500 that actually did well, right? I mean, obviously, all the oil companies did well.
I think was it McDonald's? There was one that actually, it was close to its all-time high. I was looking some bizarre set of stocks that you wouldn't think, wait a second, I didn't realize those recovered. And last year it might be, I wasn't, it was something like McDonald's and Coca-Cola or something like that, where they had really, really good years, and you're like, wow, I wouldn't have realized.
I think it was Coca-Cola, because I drink that stuff.
That's probably what it is.
But I mean, single-handedly keep
it's kind of interesting, because I had jotted down this note to go with Michael's saying. So since 2000, half of all Fortune 500 companies have either gone bankrupt, been acquired, or ceased to exist. Half.
Wow.
And then over the past 6 decades, the average lifespan of an S&P 500 company has plunged from 58 years to 18 years. So we're looking at our economy is shifting. It's changing. It's constantly changing. It's never going to be the same. I think this goes to what Michael was trying to point out, is that just parking your money on a big name isn't necessarily going to be as reliable as it was 100 years ago. It's
hard to guess which big name. That's the issue.
I think that's the key. Yeah.
That's the issue. Yeah, right. You're always going to find people that say, I parked my money in Amazon in 2000 and now I'm set for life. Yeah, true, right? You'll find someone who says, I parked my money in Meta in
Facebook,
Facebook in 2005, and now I'm set for life. You're not going to hear the guy who parked his money in MySpace.
That's right.
In 2005.
Or the guy who
He's
parked
not
his money in Blockbuster.
Exactly. They're not set for life, right? But what happens is they drop out. It's the old. It's known when you do like historical look backs at stocks. It's known as the survivorship bias. In other words, if you look at today's NASDAQ, right, and you say, oh man, look at these stocks that if you had picked them back then, you would have made a fortune. This is the key to investing, right? He says, no, because you don't know how many stocks that matched these were in the NASDAQ back in 2005, but no longer exist in the NASDAQ. Therefore, you're not capturing their negative returns. If you looked at today's stocks and trace their returns back 15 years, they're going to look great. You're going to be like, oh, look at this. If you only buy the top 50 stocks in the NASDAQ, you make a fortune. Yeah, but you need to say who was in the top 50 20 years ago, and how many of those are just gone.
Exactly.
Yeah.
In which case, you're not capturing their negative returns, so they just ceased to exist. They're not in your data anymore, because you're being biased by who survived, not who's gone.
Yeah.
Well, and indexes do that, right? So, I mean, the whole point of an index is it has a definition of how to get into the index.
Mm-hmm. Right.
So, if you have a company that matches that definition, gets into the index, but then eventually it can fall out of that index if that definition,
Exactly.
it doesn't
think
match.
about it. If you have a stock, like Milton said, stock goes into the S&P 500, it's one of the 500 biggest companies in the U.S. If that stock plummets, the S&P 500 won't capture its complete fall, because at some point it will no longer be one of the 500 biggest companies. It will disappear from the S&P 500 index, and the rest of its decline to zero will never show up in the index. All you're going to know is that at some point it left the index because it was no longer one of the 500 biggest companies.
Well, I mean, remember the classic example, eToys versus Amazon. Everyone always made the point that eToys was much better, and Amazon had like a 90% fall. Mm-hmm. And then little over time, eToys went bankrupt, and Amazon, which was just a book company,
That's right,
ended up taking over and being one of the top. It's like if you had looked back then and say, well, eToys clearly winning over Amazon, let's park our money in eToys over the next 20, 30 years because it's going to be Microsoft of the past. Then you would have lost. I mean, in fact, speaking of Microsoft, I think is the only, if I'm correct, is the only company that has stayed within the top 10 of the I believe it was the S&P over the past like 2 decades.
Wow.
Yeah.
Like it's the only one that has like survived, because Apple at some point, remember, had its little decline and then came back with the iPhone. But Microsoft has been really the only company to stay really close to the top over this whole period.
It's crazy. Now, speaking of index, we actually have an audience question from our friend Andre Xavier, a fantastic member of our community.
Good morning,
Andre. Good morning, Andre. He asked, so what's your opinion on an index universal life insurance as an investment option? So like, you have some of the universal lives that will put you in an index. How is that different from what we're talking about here with index investment? Because it's a different vehicle.
Right, that is a different vehicle. So I've seen many of those, and the issue you have to be careful about. First of all, my assumption is that it's the whole life, right? Because that's whole life is the only one you can do something like that with. Basically, they take your money, and part of it is invested in indices. There's nothing wrong with that. So those are probably good opportunities. However, keep an eye on, because a lot of those have specific caps. So they say, yeah, you'll catch we'll give you the S&P 500 or whatever it may be,
but not beyond
5%, but not beyond X percent, right? Mm-hmm. So just be careful about that. But if the index tracks it perfectly well, or the insurance tracks it perfectly well, then that's fine. Mm-hmm. Yeah.
I mean, our usual philosophy, but I think you would agree, right, is that investments and insurance they have different goals.
Exactly.
Right, and so we wouldn't recommend you put you wouldn't want your entire investment savings to be in an insurance vehicle, even if that insurance vehicle has some kind of investment upside, just because insurance is designed to just protect you more in the event of catastrophe, protect you more on downside, but very limiting on the upside, and you're essentially trading market risk for the risk of that specific insurance company. So it's not really risk-free. I mean, insurance companies are allowed to use the word guarantee because they're regulated differently, right? But it's not a risk-free investment just because what's happening is that it's being guaranteed by the risk of the insurance company itself, which, depending on your investment, is not necessarily less risky than U.S. Treasury bonds, as an example.
Right.
Right. So the key is just to know that, there may be insurance products which are beneficial, can have sort of an investment upside to them, an investment-like upside, but that doesn't necessarily make them the same as investing in a retirement account for the future.
I mean, without
you want to diversify even among those levels.
Yes, I mean, without any doubt. I mean, and I know we look at this all the time for many of our clients, but when we think of insurance, at least our opinion, our thought is insurance is to protect something, right? Mm-hmm. So look at your insurance policy from a perspective: what do I want to protect, and buy that protection. Do not add an element of investment, because the chances are, as you mentioned, one is, it's not less risky than being in the market, and there's a high probability, but you put in the market, your returns are going to be better because there's a cost, right? And that cost sometimes is somewhat higher than you just simply investing in the market. So you have to think about that from perspective of, what am I buying? Am I buying life insurance, or am I buying life insurance plus investment, right? Because there may be other ways that you can achieve a better.
That. Exactly. And obviously that's right. So they were capping at 8%, but it had a zero floor. It's very common. Yeah. In life insurance, that's kind of what you're doing. You're sacrificing.
So look at the last 20 years, right? The S&P 500 was 9.7%. So you gave up 1.7% return per year. Yeah.
Per year.
Yeah.
Basically, you're sacrificing that in exchange for a downside kind of protection there. So it all depends how you choose to structure it.
Exactly. Which downside is, when are you pulling the money out, right? So in other words, it really doesn't really matter.
Yeah, exactly. Over the very long term, that downside protection becomes less and less valuable.
Exactly.
In other words, yes, if you may need to pull out funds in 2-3 years, the zero floor of an insurance product is going to be very attractive, right? If you sit there and say, I'm not going to touch this money for 20 years, at that point, the downside protection becomes irrelevant, unless you really believe that 20 years from now, the economy will actually have declined and the market along with it.
Exactly. Yeah.
So it's all about how you choose to structure an overall risk portfolio with insurance plus investments.
Exactly.
So this is a great question.
That's a very good question.
A lot of people encounter those.
Yeah.
And it's good for people to learn about that.
Yeah. Now, those are fantastic questions. Yeah, I mean, the insurance industry is, the products they have is just enormous amount of products. They're all different. So it's really good to do your homework and take a look at it, and that's why it's good to tap on your financial advisor and say, what do you think about this also?
Absolutely. One of the things I know we had been thinking of is that, which I know Nick has done a little research on, one of the things of investing in those indices is that you then also get access to what has been a major driver of returns, which is dividends, which I think a lot of people don't think about. Typically, you invest in a stock and you think, no, I will make money over the long term because this stock goes up. You buy Amazon and say, well, if I make money on Amazon, it will be because Amazon goes up in price. But in reality, over the very long term, that's not actually the major driver of return. It's actually dividends, which I know you.
Did you want to read the statistic?
No, you go for it.
So the statistic that we found since 1960, 84% of the total return of the S&P 500 index came from reinvested dividends.
Wow.
84%, which is huge.
But that's important. The key word is reinvested. So basically, you get your dividend, whether it be, and the beauty, I mean, we always talk about this also, right? What we like is indices or ETFs or mutual funds, whatever you like to invest in, right, that pay either on a monthly or on a quarterly basis. Now, it's rare to find equity funds that pay on a monthly basis. There are some closed-end funds that do that. So most of the equity funds do pay on a quarterly. Bond funds pay on monthly. The beauty about that is that you are now basically getting your dividend 4 times a year. So if the market, I mean, you look at last year, you look at 2020, the markets didn't drop at the very end of the year. They dropped in March, right? I mean, those by the end of March, you were pretty much done as far as the returns of the market being negative. Exactly. So you want to get your dividend then so you can, boom, reinvest them at that lower value. If you get your dividend once a year only, and it's usually the end of the year, so December 31st, you get your dividend, by that time, it's like you're at the hope in prayer that you're reinvesting at the lowest
At the
point,
lowest
which
point.
may not be the case. So
Yeah.
quarterly dividends make a lot more sense, and dividends even better. But that's the key, is the fact that you're constantly getting some money and then reinvesting it. And the fact is, if the market's down a little, now you're buying something lower, right?
Exactly. I mean, think about it. You would not have wanted, if 2020 is the perfect example. If you got your dividend payments all on December 15th of 2020, you've missed the boat. The market's not only recovered, it was up for
exactly.
the year at that point.
Exactly.
I mean, you would have wanted to sit there on March 31st and be like, okay, I got some more money to reinvest.
That's
because
right.
This market is down big time, and we all know that why it's down, and that it's going to eventually recover.
Yeah.
Well, it also highlights the essential nature of the stock market as it was originally intended, right? The original purpose of creating stock was that companies that had large expenditures or wanted to do something large, whether it was a railroad company. We're thinking far back, but you have to remember where these things came from. Railroad companies, whaling companies, things that needed large investments because they were you're laughing because, I love whaling, yeah. But whaling
We
is
had
one
to
of
throw Moby Dick in there. You know?
No, but it's true. I mean, that was the origin of whaling, was that you needed to have, I mean, to be honest with you, the first evidence of this was actually in ancient Rome. It was a shipping merchants there were reports of
Would it be a show with Nick if we didn't get an ancient Roman?
Yeah, but
ancient Roman
the whole
reference?
point is that our culture was founded in these Western cultures in part, and one of them was the fact that you could buy pieces of companies. And in exchange for your money, which they would gather from a lot of people, you would get a portion of the profits, which we call dividends. And that would be for instance, it was a form of security for whalers and sailors, etc. Because if it was a very high risk that you would die, because it turns out that whales don't like being killed and could destroy you very easily, as is evidenced by Moby Dick. And your families would be left with nothing because you were not there to provide for them. And
Right.
so if you had a portion of the shipping company's stock, the
family
shipping
was
company
provided.
could still provide because you would get dividends. So at least it would have some support. It was almost like an insurance. I mean, it wasn't insurance because it wasn't a bundle and it wasn't dependent on your life, but in
But it's
essence,
like a rudimentary form of it.
it was a
Right.
rudimentary form of insurance because it was a form of it's passive income, and that was the whole purpose. Is that I want to start a company, but I don't have the money to build this extremely large thing that could be a great business. I need to collect it from everyone's extra dollar, and in exchange, I gave everybody small pieces of the future profits. And that is really, really what we have to remember is what the stock market is. It still is like that today. The whole point when a company IPOs, it is exchanging part of itself, like the owners are giving up their ownership in exchange for capital so that they can use that capital to either focus on certain projects that they want to develop or they need that next step to expand, and they do that.
Right. In other words, basically, IPO is an initial public offer, and that's
Right.
when a private
company
company
goes
becomes
public.
public.
Yes.
Right. And certainly one of the reasons to do that, because when you're growing, you need to borrow money most of the time from a bank, right, or some venture capitalist in order to grow that company, right? And then you get to a point where it's like there's no more. I mean, you need to borrow a lot more. So two ways: either you issue a bond, or you go public, and that's how you get your money. Yeah. So
over time, that's what happens.
Yeah.
You collect the dividends, you reinvest them, and that just boosts your wealth tremendously over the long term. And it's one of the benefits of doing that kind of diversified investing, because if you buy a company, sometimes the most attractive, new companies, the small ones, the biotechs, the startups, they don't have the funds to pay dividends.
No, of course not.
Right? They're not going to pay you any dividends.
Right.
So you're relying on capital gains. You're relying on growth, the share price going up. But when you have a diversified portfolio, you have some dividends to back that up. And like you said, so that if those small companies go down, well, great. I've got cash that just came in from these big companies that I can then put into the small ones to rebalance my portfolio.
That's correct. That's correct. And the other thing is, I know you had a statistic, and I don't remember the stat, and maybe it's just in your head, but again, when we talk about asset allocation, because a lot of people is like, where does your return on your portfolio come from? In other words, we have a bundle of quote unquote securities, and those securities are in different types of either ETFs or mutual funds. Where does the return come from? I can't
remember the statistics. I couldn't find it yesterday.
But a
either,
large
so I
portion
for
of the return, and so I can't remember the number,
Yeah,
but it was
dividends.
very
It was a
big.
tremendous
No, not
bump.
just dividends. Comes from the asset allocation process, right? And so it's so important to say, instead of just having all your money in either tech stocks or value stocks or growth stocks, again, you need to diversify that portfolio, because that diversification is really what defines and explains the return of your total portfolio. It will push it up because you've seen it live big time in the last 2 or 3 years of sectors being hugely differentials in returns from one to the other. I mean, it's been astronomical versus in the past. I mean, growth stocks last year were horrendous. Value stocks did okay, small stocks did okay, but growth was just terrible. So again, the ability to reshuffle your portfolio makes you a lot of money going forward.
Absolutely. Absolutely. Shout out Jocelyn Kelly. Thanks for watching the show this morning. There's some great viewers joining us this morning on the show. So I think our last topic for the day
was the evil R word.
Was the evil R word.
Yeah,
I don't think it's that bad, but
we joked about that. But I think mostly just kind of looking ahead and saying, all right, what are some of the things that we should be thinking of or be aware of?
Yeah.
In this coming year, I know we had some different numbers on that.
So I'm not as sanguine. Well, no, I shouldn't say that.
Well, that's a nice word.
Yeah, but that's
well done. That's well done there.
I'm not as worried about recession this year than I was last year for 2 reasons.
So you are sanguine.
No,
Optimistic or positive?
So I think the chance of recession, I think, are relatively high, right? I mean, I think we're seeing all the numbers, and the numbers are coming out, continue to point that. I mean, I think the leading indicators, right, which is one of the areas people look at, it hasn't been this bad since the COVID year and since the financial depression, right, financial crisis.
Yes.
So, I mean, that's just not a good number, right? You look at that and say that's not certainly a positive number.
Exactly.
That's leaning towards we're going to have a recession. The reason I'm not as worried about it is for two reasons. One is, we already had a drop in the stock market of 15 to 20 to 25%, right? So part of it is there, right?
Part of it may have been priced in already.
Yeah. Second of all, the bond market had a horrendous year last year, but now interest rates are higher, which means that you can now begin truly to protect your portfolio in ETFs, mutual funds, whatever you want, right? That has much more income. So in other words, when you start with the area that's supposed to protect your portfolio and the interest rate is 1%, you're getting zero. I mean, you're not getting much protection at all. And we saw that last year. Interest rate went from, let's say, 1 to 4%, and you got hammered with a 14% loss on your portfolio, right? Now you're starting at 4%. Well, now you got a 4% cushion in your portfolio. So if interest rates go up by 4%, you may be just breaking even, right? In most cases. I mean, the mathematics don't work exactly the same depending on which bond you own, right? But you can see that you have some protection. So we're in a year where if you really structure your portfolio correctly, right, you can withstand a potential recession, maybe some more down market in stocks, right? But at the same time, if we're wrong and the stock market goes up, and we've seen that before, you have a recession, it's like, yeah, we already knew it was coming last year. That's why the market was down 14, 15%, right? But this year, we're looking forward and like,
Exactly.
yeah, 2024 is going to be good. Therefore, we have to buy now, right? So you have to be careful about that.
2020.
Yeah.
I mean, the GDP collapsed in all of 2020. The year's GDP number was down.
Well, exactly.
Right, 6%. Right, but stock market was positive because the whole thing got priced in March, and by the rest of the year it was like, okay, well, it's been priced in.
Exactly.
Right?
It's opportunity. So again, you have to be cognizant of the fact that these things can happen, but I think the idea of worrying about it doesn't make any sense. First of all, it's our job to worry, right? But it's our job to worry, but then structure those portfolios correctly for
Exactly.
And every client's different. Every client's different. We always say that too. I mean, if you're in your 70s, you have a different style of portfolio than if you're in the 30s, right? And so on and so forth. So, but you guys know I'm so excited this year because there's so many strategies. First of all, we did so many strategies last year in the bond market that helped our clients so much. There's so many strategies this year that I think are also going to be beneficial that I'm excited about it, right? And then the following years, then we'll see. But it's just
think about some of the opportunities that are here. You always have to look ahead rather than looking back. What I mean by that is you could sit here and say, dang, bonds prices down so much in 2022.
Right.
The flip side is bond yields are higher than they've ever been. So
That's
now
right.
you can actually think about 3 years ago, you couldn't get 4% by investing in U.S. bonds, U.S. government bonds.
right.
Now what can you get from U.S. Treasuries?
Well, you can get 3 to 4%.
3 to 4%.
Yeah.
So you could sit there and say, I can now receive funds from basically the safest investment out there, which is U.S. Treasuries, that was not possible 3 or 4 years ago. So I have more protection going forward, because 3 years ago, your protection from bonds was that they wouldn't go down if recession hit. Let's face it, 4 years ago, the only thing bonds offered you was if the stock market collapses, at least my bonds didn't go down because they're paying me 0%, so there's nothing. Now, you sit there and say, well, if the stock market collapses, I'm getting 4% from my bonds.
And not only that, I mean, the yield curve is inverted, meaning short-term rates are higher than long-term rates, right? I mean, you can buy U.S. agency bonds in the short end of the marketplace, meaning less than 5 year in maturity of bonds, at over 5%. These are U.S. agency bonds. So basically, to a certain respect, they are being guaranteed by the agency of the U.S. government.
Yep, they're not as safe as Treasuries.
Exactly.
But they're pretty darn close.
Exactly. So you think of that, and then you add maybe investment-grade corporate bonds. You add another 1% to 2%. You're looking 6-7% in your portfolio in the short end, which isn't going to have a lot of impact if rates go up because they're in the short end. So mathematically, they don't have the impact on price as much. That's good protection with not a lot of quote-unquote duration maturity risk, right? So that's a great portion of your portfolio that you can say, I want to protect it. How do I do that? And there's ways, right? So this is, this year, without any doubt, whether recession hits or not, I think you can structure a portfolio that's going to do well, right?
Exactly.
And or it's going to be protected much better than it could have been protected last year.
It's always looking forward. What can I do?
Exactly.
Given what may be coming.
Yeah.
Absolutely. Well, gentlemen.
So that's a positive. That's from a positive note. I mean, just always.
We try to add some positivity.
There's always opportunity.
Overall,
that's why.
Overall, the bottom line is investing is a good idea, especially, whether you're investing to save for a house, for a car, for your retirement, right? The structure of the portfolio will be different, but it's always a good idea. Invest, don't worry about it. Think about what you're doing, put a little bit in there, and if you can put a little, that's a nice thing about 401ks, right? And 403bs. It comes right out of your paycheck, and so you're constantly buying on I don't know how often those 401ks, but let's assume they even buy just once a month, right? Every month they're buying something. So you're buying the dips, you're buying the valleys, and it's just fantastic over time, right? So I think that's so important for people to do that at least and begin to save a little bit of money and not worry about whether the recession is coming, not coming. It's how long before you need the money is what counts.
Exactly. No, well, guys, this.
Not for fun stuff, right?
Not for some fun stuff. Not for some fun stuff. No, I'm just kidding.
Absolutely.
Our audience always love the great questions. So thank you, Xavier, for joining us this morning. So I know, we have a lot to look forward to today. Mañana this year. I don't know if you guys have something in particular you're looking forward to. We have some great guests. I
look back at all the guests and everybody that's come through this table, and all their businesses. And the one thing that you and I always see, and I know Michael's helped me out enormously. I know Nick has helped me out enormously here when I'm not here. But the passion, right, that the people bring, right, to this table because of whatever it is that they love to do, right. They create a company, an LLC, and they do it. And you can just see it when they come here. I mean, sometimes they're a little nervous at first, and you can just see they're a little quiet. And then little by little, they start talking about what they do, and it comes out. And that's the beauty about this country, right? You have a dream. You can pursue that dream. You can create, a company to pursue that dream, right? And it's great for the whole community because you now have somebody in your community that is able to give you something, right? That you may not even be able to find anywhere else, and to be able to go to that person, right? And whether it be services or quality products, and buy from it's just great,
Yeah. It's such a blast. What is some of your guys' favorite? Any
Well,
memories
for
to
me,
stand out?
I think it's been pretty incredible over the past 100 shows just how many local entrepreneurs there actually are in the Charlottesville area. Like, you wouldn't think it.
It's true.
But suddenly it's just like, I mean, especially Nick over here packing them in, sometimes like 1, 2, even 3 guests. It's like, I mean, you're talking about like 150 to 200 guests have come on this show, and it's just like, it's like potentially 100, 150 different
even
businesses.
if you count some repeats, like 100 businesses.
I mean, that's
Easily have
incredible.
probably come on the show.
Yeah.
Yeah. So that's what fascinates me, and I'm looking forward to seeing who else is going to pop up.
Well,
on the
I
show.
know you and I were probably hosting together not too far in the future.
Yeah, I was gonna say. Well, I always remember the first guest I booked was actually Ian Glomsky
from
of
Vitae
Vitae
Spirits.
Spirits. So my first booked guest, Vitae Spirits, and I just remember how much fun it was when he came on the show. It was just. It was pretty great. So it was just reminiscing. It was just one of those
absolutely.
things. It
Well,
was,
now we're like Vitae Spirits for life people.
yeah, I mean, they are the.
We keep track of what's new and don't check it out.
Oh,
and
yeah,
I know
no,
that
they
we had
have
some
that.
great events there.
Yeah, that was wonderful. Yeah,
So that was fun. I always remember the first one. I think the first time you came on with me was with Mark and Vicky Dresden.
Oh, yeah,
from
that's
the
right.
12
That's
Catering.
right.
Yes.
And we just talked about the all of them. There was that delicious bread pudding.
Yeah, apple bourbon chocolate bread pudding.
bread
I think
pudding.
it was, yeah.
That
How
that
can you
they
go
made.
wrong? Apples, bourbon,
Oh, the chocolate.
and the chocolate. That's
Like,
right.
it just keeps getting better.
Exactly. So I always remember that one.
I'm not sure how much our viewers actually like watching us eat, but we certainly love
We certainly
love the
enjoy it.
episodes.
We certainly
come and
like
drink and eat. And,
Well, I think it also goes to highlight the fact that like there's, I mean, I just remember the first time I was on, it was with Chris from Baker No Bakery,
Yup.
and she faked us out because she brought a vegan cookie, and we
Oh,
didn't
she
know.
didn't tell us in
She didn't
advance.
tell us in advance that it was a sugar-free vegan cookie, and we could not tell, and so we
No.
were just like blind.
We were like,
yeah,
"This
I dare
chocolate
remember that
chip
too.
cookie is delicious."
Like it was like amazing cookie, and it just goes to show the innovation, the ability for small entrepreneurs. It's one of those things like we were discussing when we were on. I think it was with I can't remember if it was on Keith's on Real Talk's Christmas special or it was the one with our Christmas where I said it was the ability of entrepreneurs to be creative with their problem solving. And I think it's just the passion, right? That, as Xavier was saying, the passion. But there's also that creativity aspect. They're allowed, because they are the boss, their own boss. They allow themselves to experiment with making their businesses unique, and that's something that's just so interesting. I mean, we've seen it with Castle Cider, with Vitae Spirits, with Baker No Bakery.
Jeff from Aquasivo.
Jeff from
every time he
Aquasivo.
would come
It was
on,
just-
he would tell us about things, what you do behind the scenes to think and expand and delegate tasks. It is so much that goes into it.
Absolutely.
Yeah, and it's amazing the way that the entrepreneurs have solved problems. And I mean, that's one of the things that makes a small business entrepreneurship so strong, and why Charlottesville is strong as a result of the small businesses we have here, is because you have very, very intelligent, creative people that are problem solving.
Exactly.
Yeah. I still remember remember Coco Sotelo? The reason I remember is because
Coco
the
Sotelo.
whole show was in Spanish because le gusta hablar español y hablaba así, and it was just so much fun just listening to her. It was just like, wow, okay.
So it's
fair.
passion.
but-
It's the passion.
Well, that's the beauty of us being bilingual
Of
too.
course.
Right? Our guests can come on and we can do questions in English and Spanish.
That's
Oh,
right.
yeah, that's always fun.
Which we have done.
And
That was
Chico
fun.
Coffee,
So
yeah.
Coco's
And
granola.
I also remember Good Times Only. Chrissy Muniz.
Oh, that's right.
With the
yes.
silent disco.
With the silent
that was a
disco.
highlight.
Yeah, but we didn't get Pops to dance, so that was.
We're gonna have to try again. We're gonna have to have Ian first, and then Chrissy second, so that after the little drinking, maybe Xavier will do a little movement.
Oh, that's the best. Thank you, Johnny Ornelas, amigo del programa, watching the show this morning.
Welcome back.
Watching and
Hey,
liking
Johnny.
the show.
Oh yeah, welcome back.
So always good to have.
How about the
him,
time we had the three women here? I think it was three.
the
Latino round
The Latino
table.
round
Yeah.
table.
The
We had
Latino
Liz
round
Marie,
table.
That was Candela, man. That was-
and Chris, yeah.
Absolutely.
was
No,
great,
it's always just so much fun. To
No, it is,
highlight.
it is. It's-
just all the entrepreneurs, and especially I think just our Latino community, because we're doing so much, and there's so many great entrepreneurs and people making big waves in the Latino community. So I know that number also thanks to NAREP and which is. NAREP is the National Hispanic Realtors chapter that's going to be here in Charlottesville.
Hopefully.
Shout out to Ricardo Cruz Duran for,
hopefully,
for helping put that and Ana Antigua for helping
Putting that
put
together.
that
Yeah,
together.
that was a great
So
event.
that's going to be. There's just so many great movers and shakers
There are.
in the Latino community that are. Where I know that savings number is going to improve big time.
Well, they did a really good job.
The home ownership, I remember
The
we
home
talked
ownership has
about
always been.
like a year or two ago, so that it was Hispanic home ownership is on the rise. So there are some positives. I know obviously they're clearly not investing as much as they should, but buying homes is a good investment in
It's
it.
the first step.
It's the
And
first step.
that is the first step, right? I mean, Michael's right. I mean,
think they
that's
hit
kind of the
40%
first
this year,
thing.
too.
I mean, you come to this country and you start working. The first thing, you don't just think about retirement. You think, oh, I want a roof over my head,
Exactly.
my family, right?
My own home.
So you do that, and you put the food on the table, and then anything that's left over, you begin to invest. But
Exactly.
so again, it's when you think about it, the Hispanic community is growing. But a lot of them haven't been here for ages, right? I mean, so sometimes it's only the first,
Takes a couple
it takes a
generations,
couple
right.
of generations before you get going. It's like, okay, I mean, my parents have some savings, and I'm now working, and now I can do what I need to do. So
Well, just
A lot
look
of
at
it's on the
changing-
education
well,
portion too.
Yeah,
Yeah.
exactly. Well, just look at the Italian community now versus the Italian community in the 1950s.
Sure, exactly.
Totally different story. But it was 50 years have passed with that community being here. So a lot of Latinos that are just coming now, I mean, their families haven't been here established for 50 years. So it once they've been here for 50 years, it's going to look to be a very different picture.
Yeah, because let's
And we
remember
talk about
one of the
that-
largest
I-
migrations in history. Actually, speaking of that, was one of the largest migrations in history was from Palermo to the United States. All the Italians would go to Sicily to take the boat to come to the United States in the early half of the 20th century.
So now
they-
we're having a-
and now we're
big
seeing the
with
result of that.
Latinos.
I
Exactly.
mean, between Keith Smith is Italian, we're half as part Italian. Like, there's just all these
Oh,
Italians
no,
just
absolutely.
floating around
Exactly.
the United States.
It takes a little time, and I know there was another statistic there, but
With what?
we had looked at it and we said, the Cuban community
Oh,
was the
among
same
the
way.
different, yeah, among the
right?
different Latino populations in terms of median wealth, you can
Yeah.
see the ones that have been here for a
For
very
a longer time, exactly.
Yeah,
have
Dominican,
higher-
unfortunately, the medium net household, the Dominican is the lowest at 9,000, and the highest is Colombian at 141,000 median net worth. When
Those Colombians are killing it.
Yeah,
Yeah.
Cuba is second. Cubans are second at 92,000. So I'm gonna have to text Virgil, who's also Cuban, and be like, we need to do better. We need to get richer.
But the point
When
is,
next time Lily,
but the point is, you can see
comes
that.
on, I'm going to be like, "What is your father doing? How
Yeah.
how are these Colombians making all this money?"
So basically, I mean, that's the whole process. I mean, the Cubans came here in the 50s and 60s, right?
Yeah.
And so they settled in, and now you have basically the second generation is already moving here, right? Is already here, built here, and they've built businesses, and it's the same thing.
Yeah.
And so now, their net worth is growing, right? Because they've been here over 50 years, and it's not just the first generation. So it takes a little
Exactly.
bit of time. Yeah.
And all the other Latinos, I mean, we see how hard Latinos work and how much they save.
Absolutely.
So all the other groups that have come later are going to slowly build up
Right.
that wealth as well.
That's right.
Because we have those
Yeah.
same values of hard work and family and saving.
Well, and another interesting, at least for Cubans, one thing to remember that's somewhat interesting is that Cuba had a lot of exposure to America
That's
pre-Castro because of the fact that, I mean, it was a 2-hour flight from Miami. And we used to watch, if you watch old movies that take place before Castro,
They would fly from New York to Cuba to spend the evening.
they would go to the weekend to Cuba, and there were a lot of success. I mean, just from our family, successful businesses that had that exposure to the American capitalist economy,
Right.
and so a lot of that knowledge, even though some of it unfortunately was lost in the communism when communism took
All of
over. Well, no, in the sense that like some of the knowledge was lost, but not
yeah.
all
No,
of it,
no,
because
yeah,
a
yeah.
lot of those entrepreneurs ended up coming to America, had to start over.
Exactly.
And starting from scratch is we know from it's difficult to do that. But
But over 50 years, they built successful
Exactly.
businesses, and now their net worth is higher.
Exactly.
right, and so there was some. I guess I'm hoping that as these cultures get exposed more to entrepreneurship, you'll see the numbers rise for some of the struggling groups.
And you see it. I mean, again, it's like Michael said. We have here in Charlottesville all the entrepreneurs that came. I mean, we had all different cultures: Salvadorians,
We've had El Salvador, Mexico,
Peru.
Brazil. I mean, which is
Yeah.
Latino. if
Yeah,
not-
Latino, yeah.
Yeah, we do
not
that.
Hispanic, but Latino.
They're not Hispanic, they're Latino,
Yeah.
yeah.
Brazil, Peru,
Venezuela.
Venezuela.
I mean, so they're
Colombia.
from So they're here already and they're growing.
Puerto Rico.
Puerto Rico.
Puerto Rico. So
Trying to see if
So
there's
yeah, so
another one.
many. So many different cultures, and so we look forward to more of that on the show. Which, I mean, we have a bunch. I mean,
We
coming
have-
up,
yes.
we have Terry Cristina Arroyo from Plant Studio are going to be coming on the show. And this is all just the spring, just this spring. Taina Fallas Castro from Taida Coffee going to be coming on. Sandy
Wow.
Ornelas from Sandy Boo Photography going to be coming on. Miguel and Carolina from Craddock Serious Insurance going to be joining us. So we got
They were
so
always
much.
special, yeah.
So many great guests that are going to be coming on the show this spring. I mean, even next week, our friend David McCormick, some music from Early Music
back.
America is going to be coming on the show. So we have just so many fantastic people that will be joining us in the
In the
weeks ahead,
spring,
in the
yeah.
Thursdays
Just-
ahead, just the spring alone.
We are
it's
booked through
exciting.
May.
It's exciting.
So that's exciting.
Maria's, you've done a great job. You know.
He was
fine.
looking for you to say that. That's
I
what
know.
he-
No, I'm just, it's,
Well, he slipped me 10 underneath the tables ahead.
no, I
Say
didn't.
that.
I'm not gonna pay you to say anything nice, but I'll just say it myself for that matter. It's cheaper. I did an amazing job booking through
It's only
May.
$10, not that
But
expensive.
It's still, I could buy 2 coffees for that, or a bottle of wine. You see, the funny thing is everyone doesn't realize that Xavier and I always measure things by how many bottles of wine you can buy with that. So if we say, hey, we saved $20 on this thing that we did, we'll be like, that's 2 bottles of wine.
Absolutely.
Was
Yeah.
one, yeah,
Yeah.
exactly.
And sometimes maybe even 3 because they had that.
If you get a
That-
They have a
sale.
sale at Costco.
Yeah.
Yeah,
Sale at
I mean they had
Costco,
that
it's 3.
that
Bordeaux.
Spanish wine, the
Oh, the
Bordeaux
Rioja.
was like
The
$6
Rioja
or
for
$7.
$6.99,
Yes,
yeah.
Rioja is the Spanish one. Bordeaux
7
is
times
the
3 is
French,
21. See, $20
There you
That's
go.
3 bottles of wine.
3
I
bottles
had
of
to
wine.
I had to throw another
Yeah,
dollar in
yeah.
there. That's okay.
Unless you buy
I
that
found those.
Hungarian wine, which is a little bit more expensive, in
that's
which case
different.
you buy one.
We're Latinos, we drink Rioja.
Yes, that's true. And cafe con leche.
And café con leche. There we go. Oh, well, gentlemen, it's been an absolute pleasure. As always,
Absolutely.
love being on the show with you guys, and looking forward to many more
100 more.
shows. 100 more. 100 more
At
shows,
least.
knock on wood, at least of today, Mañana. So it's been a pleasure. Just want to thank you all. Thank you, Judah, behind the camera, for being here for 99 out of 100 shows. Thank you, Jerry, behind the camera, for being 1 out of 100 shows.
Yeah, we couldn't have done that one
We
without
couldn't
Chet.
have
Let's
done
be
that one
honest.
without
Let's
Jerry,
be
'cause
honest.
You and I certainly didn't know how to run the run the computer back there and get this on the show. And just thank you, our audience, for just always being supportive. Thank you to our partners that make this possible, that literally
Exactly.
make this possible. Forward Adelante, the Gym CVille, Craddock Serious Insurance, Castle Hill Cider. Just really appreciate all of you and what you do for Today Mañana. Thank you, Emergent Financial Services, for presenting Today Mañana. That also wouldn't be possible without that presenting partnership there. And just really appreciate all of you for your questions, your comments, and for constantly sending us people. You can't tell you how much we appreciate people
It's
like
the best thing.
Nickolas, Philadelphia, that send us amazing people to feature
Yes.
on the show. Great members of our community. So we appreciate all of you. We look forward to seeing you next Thursday and many more to come. But until that time, as we like to say on the show, hasta mañana. 100, that's a wrap. 100 episodes.